Foreclosure is not your only option. If you're falling behind on your mortgage or you're worried you may not be able to keep up with the mortgage much longer, I know how overwhelming that feels. Actually, a lot of homeowners believe that once they're behind, foreclosure is inevitable, but that's just simply not true. My name is Dawn, and I'm with Short Sale Experts. I help distressed homeowners navigate the foreclosure alternatives, and I work with homeowners nationwide. I'm here in Texas, but I'm not limited to just Texas. I have a national network in place. So if you're here in Texas or anywhere else in the country, you still have access to guidance and solutions. So today, I want to walk you through the real options that homeowners have to avoid foreclosures, protect their credit as much as possible, and just move forward with the plan that actually works for their lives. Before we go on any further, though, I do want to make one thing clear. Whatever option you choose needs to be a long-term solution, not just something that buys you time right now and puts you right back into the same situation later on. My job is actually to help you understand what choices you have so you can make the best decisions for your situation. So, one of the biggest mistakes homeowners make is waiting too long to act. I get it. You're hoping things improved. You're trying to catch up. You're avoiding the stress of it. But here's the truth. The earlier you act, the more options you actually have to prevent a foreclosure. As the foreclosure process moves forward, some solutions simply disappear and are no longer available for you. Even if you're unsure of what you want to do, education gives you power and puts you back in control of your situation. Now, one option to avoid a foreclosure is a loan modification. This is when the lender agrees to change the terms of your loan to make the payment more affordable. And this can include like lowering your interest rate, extending the terms of the loan, your current loan, and moving missed payments to the end of the loan. Now, this option works best if you want to stay in your home and keep it, and you realistically can afford a new payment long term. But it's important to understand loan modifications are not guaranteed. They actually require extensive documentation, and lenders carefully review the income and the hardship. Now, this can be a great solution, but loan modifications are not right for everyone. The second option is a forbearance. A forbearance allows the lender to temporarily pause or reduce payments for a set period of time. This can help if you're dealing with a short-term hardship, like a job loss or a medical situation. But forbearance is not forgiveness. When that forbearance ends, those missed payments usually have to be repaid, and sometimes all at once. That's why it's very critical to make sure this is a bridge forward, not something that creates a bigger problem later on. The third option helps you if keeping the home no longer is realistic for you and it doesn't make financial sense. Selling may be the best option to avoid the foreclosure. If you do have equity in the home, a traditional sale can allow you to pay off the loan and move forward cleanly. Pricing it right, pricing it aggressively is important. If you owe more than the home is worth, a short sale may actually be the option. A short sale allows the lender to approve a sale for less than what's owed, so you can avoid the foreclosure and minimize the long-term credit damage. And this part is really important too. Selling in a pre-foreclosure or a short sale situation is not the same as a normal sale. It requires correct pricing, strategic marketing, serious buyers, and an experienced lender negotiator. Timing, process, and strategy absolutely matter here. Now, the fourth option when selling isn't possible is a deed in lieu of foreclosure. This is when you voluntarily transfer ownership of the home back to the lender. It can be less damaging than a foreclosure itself, and actually some lenders offer relocation assistance in this in a deed in lieu, but lender approval is always required. And additional liens can prevent this option, as the home has to have a clean title in order to do a deed in lieu. Because of that, it's usually explored after a short sale is considered. Now, finally, homeowners often ask about bankruptcy. Yes, bankruptcy can absolutely be used to temporarily stop the foreclosure through an automatic stay from the courts, but this part matters. Bankruptcy is not a solution in itself. It does not eliminate the debt. It does not eliminate the mortgage. It just pauses temporarily the process. And again, you need to have a plan in place for whatever happens next. Otherwise, you risk up ending right back where you're in the same situation all over again. Because a bankruptcy has long-term credit impacts, it should only be considered after all other options are reviewed and with a clear strategy moving forward. Now, here's what I want you to remember. Foreclosure is not your only option. There are real solutions: loan modifications, forbearance, traditional selling, short sales, and more. The key is choosing the solution that actually works long-term. Again, not one that just delays the problem. So if you're struggling or you're unsure which option fits your situation, that's where I come in. Again, I'm Dawn with Short Sale Experts, and I specialize in helping homeowners navigate the decisions with clarity, with dignity, and an actual plan for the future. And because I have a nationwide network, I'm able to help homeowners far beyond just Texas. No matter where you're located, you don't have to figure it out on your own. That's where we come in. Check out my link in the bio for my short sale guide, and you can contact me at info@shortsaleexperts.net. Thank you. And in the next video, I'll actually walk you through how long a short sale actually takes, because it is not as short as the name suggests, and understanding the timeline can take a lot of fear out of the process.